ICICI Bank is planning to raise around $500 million from international investors after almost 10 years. Why is one of India's strongest private banks suddenly borrowing money from overseas? Is this a positive signal for shareholders? Will this increase profits or create new risks? And can this move support future stock price growth? Stay till the end because we will understand everything in simple language, including the benefits, the risks, and what investors should watch before making any investment decision. ICICI Bank is planning to raise approximately $500 million through dollar-denominated bonds under its Global Medium-Term Note program. This will be the bank's first major overseas dollar bond issue since 2017. The borrowing comes after the Reserve Bank of India introduced a special foreign currency swap facility which reduces the cost of overseas borrowing for Indian banks. This policy has encouraged several large banks to raise funds from international markets. What is a dollar bond? A dollar bond is simply a loan taken from international investors. Instead of borrowing in Indian rupees, the bank borrows in US dollars. International pension funds, insurance companies, sovereign wealth funds, and global institutional investors invest in these bonds and receive interest from the bank. At maturity, the bank returns the principal amount. Why is ICICI Bank raising money? The objective is not to repay existing shareholders. The objective is to strengthen funding, support future loan growth, maintain healthy liquidity, diversify funding sources, reduce dependence on domestic deposits, take advantage of lower borrowing costs available through the RBI swap window. This gives the bank greater flexibility to finance future business expansion. Why RBI introduced this facility? Indian banks require additional funds because credit demand is growing faster than deposits. To reduce funding pressure, the Reserve Bank introduced a concessional swap window. Banks borrowing dollars from overseas can swap the foreign currency into Indian rupees at a lower fixed cost. This reduces currency hedging expenses and lowers overall funding costs. Benefits for ICICI Bank: lower funding cost compared with traditional overseas borrowing, access to a large global investor base, better liquidity position, support for future corporate, retail, and infrastructure lending, greater diversification of funding sources, potential improvement in profitability if funds are deployed efficiently, improved financial flexibility during periods of strong credit demand, strengthened international market presence. Benefits for shareholders: if the borrowed money is used effectively, the bank can expand its loan book. Higher lending can increase interest income. Higher interest income may improve net profits. Improved profitability can support better earnings per share over time. Strong earnings growth often supports long-term shareholder value. International fundraising also reflects confidence from global investors, which can improve market sentiment. Risks investors should understand: foreign currency borrowing always carries exchange rate risk. If the US dollar strengthens significantly, repayment may become more expensive. Global interest rates may increase future borrowing costs. International market volatility may reduce investor demand. If loan growth slows, the additional funds may remain underutilized. Higher leverage without adequate returns can reduce profitability. Investors should therefore monitor how efficiently ICICI Bank deploys these funds. Comparison with other banks: several major Indian banks have already raised overseas funds under this RBI facility. The objective is similar across the banking sector: reduce funding costs, support future lending, strengthen balance sheets. ICICI Bank joining this trend indicates that management also wants to optimize funding efficiency during a period of strong credit demand. What investors should watch: management commentary after quarterly results, cost of borrowing achieved, future loan growth, net interest margin, credit growth, asset quality, gross NPA, net NPA, provision coverage, capital adequacy ratio, return on assets, return on equity, quarterly profit growth. These indicators will show whether the overseas borrowing is creating long-term shareholder value. Long-term investor view: This fundraising is not automatically bullish or bearish. It is a strategic financing decision. If management deploys the funds into quality lending opportunities while maintaining strong asset quality, the move can support future earnings growth. However, investors should continue monitoring execution rather than focusing only on the fundraising announcement. Strong execution determines long-term shareholder returns. ICICI Bank remains one of India's strongest private sector banks with a diversified business model. The planned overseas bond issue demonstrates proactive capital management. For long-term investors, the key question is not whether the bank is borrowing. The real question is whether the borrowed capital generates higher profits and sustainable shareholder value over the coming years. If you found this analysis useful, subscribe for more detailed stock market and corporate finance insights. Pros: for investors, lower borrowing cost, better liquidity, supports future loan growth, diversified funding. Global investor confidence, potential earnings growth, improved financial flexibility, possible long-term shareholder value creation. Cons for investors: foreign currency risk, exchange rate fluctuations, higher repayment cost if dollar strengthens, global interest rate uncertainty, execution risk, market volatility, possible pressure on margins if funds are not deployed efficiently. Create an ultra-realistic YouTube thumbnail in 16 by 9. Use a premium global financial newsroom with dramatic blue and gold lighting. Place a giant glowing ICICI Bank headquarters in the center. Show flying US dollar notes and a massive glowing $500 million figure. Display a world map connected with bright financial network lines. Show green stock market charts rising sharply. Add international bond certificates floating around the bank. Include institutional investors shaking hands in the background. Use cinematic Bloomberg CNBC style graphics with premium realism. Add glowing arrows pointing upward. Use high contrast lighting and intense financial atmosphere. Large bold headline: ICICI Bank, $500 million big move. Use maximum curiosity, maximum click-through rate, premium financial television quality, and ultra-realistic details. Disclaimer: the information presented in this video is solely for educational, informational, and knowledge-sharing purposes. The views and opinions expressed are based on publicly available information, company announcements, regulatory filings, newspaper reports, and other reliable sources believed to be accurate at the time of recording. This video does not constitute investment advice, financial advice, stock recommendations, legal advice, tax advice, or professional consultation. Investing in the stock market involves risks, including the possible loss of capital. Past performance or management projections do not guarantee future results. Any discussion regarding the future prospects, growth potential, or the possibility of a stock becoming a multi-bagger represents analysis and opinion, not a prediction or assurance. Viewers are strongly advised to conduct their own research, DYOR, and consult a SEBI-registered investment advisor, financial advisor, or other qualified professional before making any investment decisions. The creator and Suffer or Seek Knowledge channel shall not be responsible for any financial loss, investment decisions, or actions taken based on the information provided in this video. Invest responsibly.